So glad you could join us today. I'm Marlon Bowling with you, your tour guide to the ag commodities. Well, I am joined this morning by Brian Hoops, president of Midwest Market Solutions. Now, he is located at the headquarters in Springfield, Missouri, and I want to talk about this market action that we saw overnight. Now, I'll start by bringing up the fact we had no overnight export sales again this morning, Brian. Kind of quiet there. You know, if it wasn't for Mexico, we really wouldn't have sold too much here this year so far. Getting a little more concerning as we go and as we get closer to Brazil coming online with their supplies. However, let's look at our market action here overnight. Now, after turning lower yesterday, let's go to the corn board. We'll start with that. Our quotes are provided by bar chart. Now, look at corn, 6 higher overnight. March at 605.5, and you have December new crop now 3 1/4 higher at 561. So a nice solid gain there. And I'll point out it's led by the nearby contracts. Soybeans had a heck of a night. They had March coming back and going 16 3/4 cents higher at 1378. That's only 2 ticks from our high of the overnight session there. Meanwhile, if you look at the wheat, now in Chicago, wheat is 8 1/4 higher on that March contract. So the finish of the Globex trade was at 777 1/4, and July was up 9 cents in the Kansas City market. We had nice double-digit gains in many contracts. March was up 9 1/2 at 782 1/4, and July up 10 1/4 cents in that overnight trade. In the Minneapolis market overnight, you had March 13 1/2 higher at 920 1/2. July was up 12 1/4 cents. And in the cotton market, well, you had big gains in the cotton. Oh my gosh, March is over 123 now at 123.09. That's up 201 points in that overnight session. It looks like cotton is just running away with the lead here in that competition for acres this spring. What do you think here, Brian?
It does seem like cotton is off and running, and December corn is going to have a long road to make up here. A lot of time to do it before we start planting, but yeah, there's a lot of small grains and corn, as we mentioned. Probably going to have to rally to kind of keep up to buy some of these acres back, or cotton will be securing some acres, no doubt. It's interesting that soybeans are so strong when there's good rains in the forecast for South America. There's like 2 to 4 inches over the next several trading sessions, but I think the market is looking past these rain events. I've already dialed in some weakness because of these rains and looking forward to longer term forecasts, February and into March, a return of the La Nina pattern, which means drier and warmer than normal. And it seems like the market trying to price that long-term forecast in while already absorbing some of these rains. And that's why we saw prices dip like we have over the last week or so. So getting some support from that. NOPA crush report out yesterday, 186.5 million bushels, a new all-time record for the month of December. That was a supportive feature as well. I mean, and why wouldn't they be crushing a lot of soybeans right now when these crush margins are at near record highs?
Also wanted to point out the oats market. We've been talking about that, and it has had some big moves. Yesterday, I believe it was up like 20 or 30 cents, and we had the March oats overnight up a dime again at 656 3/4, and that was off of its overnight low by about 12 cents, within a couple pennies of its high of the day. A lot of interest in the dollar value on the dollar index overnight. It weakened up a little bit. The March futures were down 133 points. Of course, all eyes were on the Dow yesterday as it lost about 500 points during the ag trading session. Well, it's back up 104 points this morning at 35,363. And of course, yesterday we had the West Texas crude over $85. Well, check this out. Now today, we're at 86.16 this morning on the February contract. That would be 73 cents higher. We got as high as 87.08 as this juggernaut seems to continue here in the trade on the energy markets this week. All right, Brian, we'll come back in a moment, and we'll take a look at our livestock setup for today when we come back. Let's go back to Brian Hoops of Midwest Market Solutions. And Brian, if we look at our livestock summary from yesterday, we had a little bit of cash cattle activity that showed up already this week, but it wasn't anything to write home about. I guess I'm going to call it a little weaker on the live basis out in the country. 135 to 137 was reported yesterday. Dress basis sales maybe just a touch weaker there too. Steady to weaker, I'll call it. 217 to 218 is what I had heard. Brian, what do you hear through your sources about the way the cash cattle trade may shape up this week?
Yeah, we heard some 136 yesterday in the Southern Plains, and this morning there's a small amount being traded at 137. So I'm going to say steady right now, maybe just a touch better, depending on the volume at 137. So we've been hurt last couple of weeks by decreased slaughter because of COVID related type absenteeism. Slaughter pace is down about 5% from a year ago levels, even though we have similar numbers of cattle on feed that we need to work through. So that's hurting us, and we're backing up a little bit of cattle as a result. But if we can get through some of this, I think you will see a pretty strong cash market, especially if the economy can get past all this COVID-related talk, and it seems to be continuing to spread. And most of the news is negative. A lot of schools canceling for this week now, so that's hurting us. But overall, the cattle market seems to be just going into a sideways type pattern in here, trying to anticipate better times ahead, but just faced with this reality that it's going to be a struggle to get there, and at some point in time it'll probably happen, but it's not going to happen here in the month of January.
Well, we have kind of a weird dichotomy going on here because you have the cash cattle market really struggling just to hold its own. And then if you look at the beef cutouts from yesterday afternoon, according to USDA, those cutouts were higher yet again. We had the choice cuts up $1.63 yesterday. We had the selects up $1.34. The choice at $289.49 is compared to $278.22 1 week ago. So we're still running about $11 hotter than what we were last week. The pork side, though, really cooled its jets. And yesterday afternoon, the carcass values were down $4.73. All the primal cuts on the pork side were lower yesterday afternoon. Is that going to maybe put the clamp on the hog futures here today, do you think?
Yeah, I think it will, because we are up into some technical resistance as well for that April contract. And remember, when we slaughter, as slow our kills down, that props up our box beef values, props up our pork cutouts. And that's what we're seeing in effect in the cattle market here, is a slowdown in the slaughter, boxes moving higher, and that is a supporting feature to the cash markets. But it also means that we are slowing our kill speeds, and we're backing up cattle. So that could be reflective in this Friday's cattle on feed report.
April live cattle were down 27 on the close yesterday. They were at 141.85. Meanwhile, on the feeders, well, when we finished up the session yesterday, we were lower across the board, down 95 cents on that March contract. And then you were talking about the lean hogs, and they did finish higher yesterday. We had the April contract 82 cents higher. We'll see what they want to do this morning. So, Brian, thank you for the information this morning. Good to hear from you again. Brian Hoops of Midwest Market Solutions. Janet, we'll get the trade underway in about 5.5 minutes.